This is Dario I have with me here today. He's here with me to talk about what the Business for Self program for business owners and how you can get financing on purchasing property. We're going to talk a little bit about the advantages of how you can get into the market, even if you're a new business owner, maybe 6 months in the business, have articles of incorporation, you have a business registration, and we'll talk a little bit more about how you can get started and how it affects business owners, whether they be existing or new.
That's right. Yeah. So what we do, I work for a monoline lender. What we call is RFA. We work with partners such as Chris, who again, for many years we've had a great relationship and different angles of the business, and now happy to be working a lot closer with Chris.
Yeah.
I get calls from people like Chris and many others throughout a day and say, how do you guys treat people that are, business owners or even brand new business owners? They've been doing something for years and they decided it's time that I go off on my own. So a lot of these inquiries come in, especially now throughout COVID, even since COVID, because people have shifted their mindset on their careers. So it's a great opportunity to talk about something like this, different ways that we can look at getting people approved that maybe you might not know, but someone like Chris can educate you further once we have an application.
Absolutely. And Daria, you're now with RFA. Just so everyone knows, there's different types of lenders in the industry. There's your top 5 institutions, but then you also have what we call monoline lenders that still offer lending products, and they have an alternative side to their product line as well. So the advantage between the two is that, yes, you're still getting A rates with the same terms and conditions, but monoline lenders, they don't have branches. They don't sell you on stocks, bonds, mutual funds, RSPs. They don't have any checking accounts. So realistically, it's just a monoline lender, which I'll get you to expand on a little bit more, just to explain what it means.
Sure. It's something that is broker facing. We are an institution that takes deposits through other channels to build our capital to then lend these mortgages on an institutional basis to yourselves. So when we're working with partners such as Chris and his brokerage, my job is to educate Chris on what it is that we offer, how he can educate his client base on where we are in terms of our risk tolerance or what type of client fits our space. So we offer both prime channel lending and alternative channel lending, traditionally known as A lending and B lending.
Yeah.
B lending is where I do the majority of my business. B lending, I think, sometimes has a negative connotation to it because a lot of people a lot of people think that it's less than.
Yeah.
And I think that a lot of what we're talking about today shows that it's not necessarily the case. It's solution lending.
Absolutely.
It's a way to get people approved for a loan or a mortgage that is outside of your traditional means, like Chris was mentioning, through a bank or through a prime channel. We just have a different option to do it, maybe with a little bit different terms, but it gets you that approval at the end of the day and get you to achieve your goals.
Well, Daria, I'm excited to have you here today because I know you guys have a very niche product. It's probably one of the best for business owners, which we're going to talk about, people who have just started their businesses. A lot of the clients that I work with, of course, is realtors. They're always looking to buy properties and expand their portfolios. A lot of the other clients that I work with, 80% of the business that I bring in is a lot of investors. And investors wanting to grow their portfolios, buying multiple properties, and really educating them along the way to say, here's where they are today, and here's where they'll be in the next 3, 5, 10 years.
Perfect.
But the one challenge in today's market is that interest rates have gone up, the qualification rate has also gone up, and a lot of people who have now left the corporate world have now started their own businesses. But the misconception that I see for business owners is, the understanding around the financial literacy around being a business owner and how to really get set up and how to get started. So traditionally for A lenders, they are looking for your 2 years of your T4 income. Whereas on the alternative lending side, the product and the program that RFA offers is very, very niche in terms of how they get you into the market at an earlier date. As long as you do have a business registration, articles of incorporation, and being able to have your tax filings. But in this product, because it's so niche, Daryl's going to go into a little bit more about how the program is actually beneficial to, maybe we'll talk more about maybe from a realtor's perspective. There's also truck drivers that have been now starting up their own businesses as well under corporations. And just for the general business owner that started their business, whether it be a consultant or whether it be somebody getting into their own industry at the time.
For sure. Yeah, and I guess just to talk a little bit about that in a general sense, we are very accommodating to brand new business owners. So something RFA is a little bit more unique in this market is catering to people that have a number of years under their belt, either as a truck driver under another company, or worked in a real estate office under a high producing agent, and now they decided they want to open up their own business and start producing on their own. Doesn't matter what industry that might be.
Yeah, but for real estate agents, they always were business for self. It's only recent that they were able to set up what's called a PREC, and now they can kind of run their business through the corporation.
That's right. So we've got a couple methods to qualify a realtor, let's say, where we will look at your gross commissions, your T4As, because when we're in a commission capacity, and you are self-employed, your brokerage will issue you a T4A slip. So something that will show you what your gross commissions were for that tax year. Typically, that's something that comes out around March or April, depending on the timing with the accounting. And that's something that we consider as a method to qualify you under that sense. Now, realtor clients that are incorporated, what Chris alluded to in a PREC, a professional real estate corporation, these are people that are now taking advantage of something the government's allowed them to do since, I believe, 2021. And incorporate themselves and then now perform their filings in a different manner than previous. So what we will do is we will take their bank statements real time and look at the cash flow in and out, what's coming out, take an analysis. So Chris will work with his clients and say, tell me a little bit about where your income comes from. If it's strictly from the brokerage, then we can see clearly where the income is being deposited from. But we also look at what is leaving the bank account. Do you have a car payment? Do you have marketing dollars that you have per year that you are now spending? So we look at an overall cash flow analysis and say, this is what's coming in, this is what's going out. Chris will help paint a picture by having a conversation with his clients, present them to me, so that way I can help him place the file with RFA, make sure it's a good fit, and then ultimately lead to an approval.
Yeah, and typically how long does the client or the business owner need to be in business?
For us, it's a minimum of 6 months.
Wow.
So as I was saying earlier, we're very much catering to people that are new business owners, because if we can paint a picture of, hey, you've been in the industry for 2 or more years, which is our minimum. We want to make sure that this business that someone has opened is not going to fail. We want to make sure that this business is going to succeed. So for that reason, we want to make sure that there are some years under their belt to make sure that they have the skill set. Maybe an establishment where they can operate the business, but also the client base. Yeah. Maybe they've been working for someone for a number of years and they've slowly built up a client base for themselves to say, hey, I'm ready to go on my own. And we can take someone with as little as 6 months. Really, the cash, the proof is in the pudding. If we can see the cash flow and we can see bank statements that have healthy cash flow, good deposit activity, and some healthy expenses for what they're doing relative to the size of their business, I think that's a great deal for us to do.
Yeah, yeah. And that 6 months is one of where I say it's very niche, because most times you would have to be in business for 2 years.
Correct.
You would have to file your income taxes for 2 years. And then depending on what's on your T1 generals is how we would do the income and expenses to determine what your income would be in the end.
That's right. So when we're talking about, a business owner that's trying to get into a new home, right? You're working with a realtor, you're working with your mortgage broker, and you really want to get into this new house for your family, or maybe you have a lot of debt that you'd like to consolidate. The last few years with COVID, there's been a lot of consumer debt that's been accumulated. You want to make sure that you can get that approval. And you might not be able to wait those 2 years, mm-hmm. right? When bills pile up and life happens and there might be some unexpected costs, that business is not going to wait for you.
100%.
So what I think that we're very good at doing is allowing people, again, going back to that solution lending type mentality of, we want to make sure we can get you into an approval, get you your goals quicker than rather than waiting 2 years and prolonging the problem, because then it might start affecting things like your credit score, which for a business owner, we want to make sure it's as good as possible, especially when they're new.
Yeah.
So that's when it's a good time to work with someone like Chris, so he can work with you to either get into a new home as a new business owner, or even an established business owner, or consolidate debt and grow your portfolio from there.
Yeah, I have a lot of clients that are in the business for self space. A lot of them are self-employed, where they have to file their taxes personally. A lot of them have now moved into the corporation space, where they get a corporation and they're operating their business through the corporation. But now there's a little bit of a difference between the alternative lending and the A-type lending with typical A lenders. And one of the misconceptions that I see the most is that people who start their businesses say, oh, well, I can't buy because I got to wait the 2 years, for example. So thank God there is the 6 months that we have the option for. But the other portion of it, part to it, is that most people think they have to show $140,000, $160,000 in T4 income in order to qualify to purchase a property, which is true in the event that you want to stick with an A lender. But on the alternative lending side, it's a little bit different. The rates are slightly higher. They're about 50 basis points higher. The alternative lending side offers 1, 2, and 3 year terms, and they will charge you a 1% fee. But when you do the math around it, the advantage of a business owner showing less income on the personal side and showing majority of the income coming through the business is it allows you to get into the market by using your bank statements to get approved. Mind you, the math around it is if you're showing $140,000, $150,000 in income, you're paying $40,000, $50,000 in tax. Whereas if you go to the alternative lending side, yes, they do charge you a 1% fee. So on a $700,000 mortgage, it'll be a $7,000 fee. But the advantage to that is that you're saving on the other side if you were to show more income. Now, the $7,000 is one portion of it, but the interest rate is now 50 basis points higher. So let's say on average it's about $500 extra a month. That's $6,000 for the year. So when you work the numbers, the thought process around it is, do you think that your property is going to appreciate more than the $6,000 for the year? And 9 out of 10 times the answer is yes. So you're saving on one end, but yes, you're paying out a little on the other. But overall, you're still winning. You're still coming out ahead.
Right. I think that's a really good point. I think that it's a very important note to make, is not to be consumed by the interest rate.
Yep.
I think that's a very, very common misconception out there in the world of mortgages. We do know that rates were at their all-time low just a couple of years ago, and now they're on their way back up and continue to rise. So I think that it's a great idea to work with your mortgage broker in educating everybody in terms of what is important for you as a business owner, what is important for you as a salaried individual. Everyone's situation is very different from the next, and there's hardly a cookie cutter solution for everybody anymore.
Yeah.
So I think that when we're talking about interest rates, that is one thing that I know, this product is specifically designed because we know that business owners might not claim as much income as a traditional salaried or hourly paid employee. Because you're working with your accountants, and we're looking to write down that expense as much as possible.
Yeah.
Whereas alternative lenders like RFA will actually look to do the opposite, which is maximize the income, however, using a real-time approach through bank statements.
Right. And look at the interest rates today. Like I always give the example, and I love to share it with everyone, is somebody that bought a property in 2021, interest rates were in and around the 2.5% mark. And when you do the math around it, in today's environment, interest rates were hovering around the 5.5%. Now they're up to 6%. But when you look at the numbers and you look at the monthly expenses at the end, your monthly payment on a 2.5% interest rate on $1 million, that same property now in today's environment is worth $800,000 at 5.5% to 6% interest rate. The monthly payment is $50 to $60 difference.
That's right.
Right? So there's not a big spread between the 2.5% at the $1 million mark versus the 5.5% to 6% at the $800,000 mark. So it's still advantageous for somebody to get into the market knowing that your monthly payment is very similar. And then when the rates drop, your monthly payments will drop. And as you renew your mortgage, if you wanted to refinance and pull some of the money out, you can always do so and recapture the money that you put into the property.
That's right. And like Chris said, we offer, let's say, 1, 2, and 3 year terms. It's always good to think ahead. And where am I going to be with my business in 3 years time, 2 years time, 1 year? So that way you can think ahead as far as, I think the rates are going to go this way, or, in a few years, I want to grow my business this way. So someone in your corner like Chris will be able to help you tailor that mortgage and get you into a product that will allow you to leverage it. Like he was saying, if when you come up for maturity, you want to refinance to maybe purchase another property, add to your portfolio of rental properties, what have you, or reinvest back into your business. That is a key to understanding, the length of terms and why we want to place you in a shorter term versus a longer term, so you can re-leverage a bit more often.
Yeah, absolutely.
Yeah,
I like the idea around the 6 months. That's one of the key factors. It's nice to see that there's lenders out there that'll still offer people who are getting into the business and support business owners to be able to move out from the corporate world, start their own ventures, and still be able to put a roof over their head. It's a lot of it has to do with the industry that you're coming from and the amount of income that you can generate. So ideally, what's required for someone that's business for self? What type of documents do you guys look for? Just for the general, I know we spoke a little bit about realtors, but just for the general business owner, ideally, what requirements do they need, and what documents do we need?
So typically we want to make sure, first and foremost, that in the eyes of the government, you are filing as a self-employed individual. So typically a master business license, an articles of incorporation. If those don't exist, then we'll ask for things, alternative documents like a GST return, something to show that, for the government, you have filed sufficiently as a self-employed owner. So there are documents that we can work with. There's not a cookie cutter, 1 or 2. There's a few that we can choose from, depending on how that person files. And then we'll look for a minimum of 6 months of bank statements. The 6 months will allow us to take an analysis of half of your year and annualize it to a gross number, and then back out whatever appropriate expenses are relative to your business. Now, depending on what type of business you operate, if there's a seasonality to it, let's say a landscaper that might not do snow removal in the winter, so there's some gaps throughout the year, maybe it's better to provide, Chris, like maybe 12 months bank statements than 6, because it's going to paint a nicer picture of what you do on a daily basis. So show some seasonality throughout the year, where you make the bulk of your income, where there might be a bit of a dip, in the colder months and what have you. So again, on that point of everyone being a little bit different, those are the 2 starting points. And then later on, we will ask, for some, I call some backup documents. So something to reinforce what it is that you do. So we ask for a handful of invoices.
Yeah, like invoices to confirm with the bank statements, the deposits to match them.
That's right. It's not only there just to match them, it's there to show us as a lender, this is what they've done. On August 8th, this is the job that they've completed. They went into a home, they've done an inspection, there's a cost for that. They've done the repair on the home, and it breaks down the costs so we can understand the deposit nature in your bank account and helps us understand your business as a whole. So it really just comes back to understanding the reasonability of your income, how you operate on a daily basis, and how you generate your money.
So on somebody that's generating $10,000 a month for the first 6 months, if that's let's say $60K for the year, for the 6 months, you're annualizing that to say in the 12 months where you're forecasting that they'll earn another $60K. So you're qualifying them based on $120,000. Is that safe to say?
We will be annualizing to $120,000, and then we will back out any applicable expenses. Awesome. So like I said earlier, we look at what's leaving the bank account as well. So if there's a car payment, if there's an office space that you rent and there's a monthly obligation there, or if you have some employees, that will always come off the top. So always account for things like that. Be open about any sort of expenses you are responsible for when Chris is building your application with you, so that way he can understand and sell it to his lender for sure.
Yeah, and then the T4 income, it's not something that we look at. It's just strictly
correct. Yeah,
strictly your business income.
Correct, and this is just to reiterate. The product is specifically made for these types of people that do not claim enough income in the traditional sense. So leave it simple.
They can keep it low. They can pay less at the end of the year, and they're in a win-win right across the board.
Correct. Yeah. So lenders will for this specific reason not request these documents because we know that there's a chance that there's not enough income there. So we want to be able to provide an alternative solution based on what we see in the real time.
Awesome.
Yeah.
Dario, thank you so much for being here today on behalf of RFA. I can't thank the RFA staff, from the underwriting team to the business development managers to the funding department, for the ongoing support. You are definitely one of my preferred partners, and I do appreciate, Dario, you taking the time today.
Always a pleasure.
Thanks for coming.
And for all the years that we've been working together, it's great to see this relationship growing. And it's nice to see you fight for your deals and for your clients to get them the solution. So that's a lot of what we do, and maybe a lot of is done behind the scenes. Can't thank you enough for your support.
No problem, man. I wouldn't be able to do it without all of the support, like I said, from RFA. If anyone's looking to learn more about how to get started, you can always reach me on Instagram at Quick Tips with Chris. Send me a DM, and I'll be happy to get you started.
Awesome. Thank you.